Where does the good news come from here?
You know, I mean, I think it's tough. I think the summary that was provided before I got on was kind of correct. I mean, our outlook on food manufacturing has been very bearish, and we wake up this morning with some egg on our face that we actually were recommending Kraft Heinz as one of the bigger bears on the street on food manufacturing. And the problem with food manufacturing, generally speaking, is it's just off trend. I mean, we've written a lot about the pure foods trend and the fact that consumers don't really want to eat packaged food anymore. Packaged food might as well be a four-letter word. But you also have the private label trend that's very significant, something we call the craft beer trend, where consumers want to experiment with local product or products from overseas. All these trends are very bad for packaged food, generally speaking, but crystallized for Kraft Heinz in the quarter. Now, the good news, and one of the things that we think is misunderstood about Kraft Heinz a little bit, is definitely the 3G model is one of cutting costs. But the company has done a lot of work to renovate and innovate its brands. They've done tremendous amount of work on the Oscar Mayer brand that they just wrote down. They got all of the fillers out, all the chemicals out. They brought out a natural line. They repackaged it. It's just not working. I mean, that's just the bottom line, even though they've done a lot to improve that business.
So, Scott, is this Kraft Heinz, or is this an industry problem, and who's next?
I mean, there was clearly some specific issues here with the SEC looking into some of their accounting, cutting of the dividend. But the industry is just definitely challenged. I mean, I think this is probably the third or fourth food name. We had Conagra have very significant miss and guide down. So it's not just Kraft Heinz. And as we've been writing constantly, the industry is definitely under threat by some of these mega trends. But clearly Kraft has some issues unto itself that they're trying to work through.
So, Scott, it feels like yesterday, but it was actually back in 2017 when this company tried to acquire Unilever. Can we assume that those big deals aren't going to happen anytime soon?
That's just such a great question, because we need the deals. Okay, you are in a industry that has very significant structural headwinds. And one of the things that you could do to try to offset these is, put some of these companies together. Campbell's, obviously also a company that's struggling. We thought maybe the family would just kind of throw in with the Kraft Heinz people and say, hey, let's do a stock exchange. But they want a premium. The industry needs consolidation desperately because of the trends, but also don't forget Walmart. Walmart is 30% of some of these guys' volumes. They carry a big stick at this stage and are much bigger from a revenue perspective. We need mergers, and we're not getting them, and that's part of the problem with Kraft Heinz. They really need to be a consolidator, and they haven't been able to do it.
Scott, just finally, I want you to help our audience with something. Can you take us inside your industry? On the South Side, as a researcher, as an analyst that has to put ratings on companies like this, what we sometimes see on a morning like this morning with the stock gapping lower by 25% is some analysts come out and recommend a sell after the gap lower has already happened. Scott, can you just inform us the thinking that you have when you wake up with a surprise like this? You've got an overweight rating on the stock. What you do, what the process you go through is to come out ultimately with the next move?
Yeah, I mean, I think the process is you got to play the game that's in front of you. In other words, clearly, as I said, we got egg on our face, but you can't just be reactionary. You have to look at the new set of facts, the new reality, and then take into account, do you think the company can outperform from the new base? Hey, been doing this almost 30 years, 20 years as an analyst. This happens. I mean, it happens to people's portfolios when you have a company blow up. But you need to kind of take a step back and not be emotional and just say, okay, with what we know today, what will we do? And that's the process we go through, even if the stock's working and we have a home run. So that's the process. And, you got to kind of just take stock, look at our pricing surveys, look at our store visits, and see where we think the equity can go from here. It's trading in line with the industry now, but the industry is from a valuation, but it's a very, very difficult industry.
Hey, Scott,
but we still believe Kraft is best in class.